It happened on a Friday. While Wall Street was packing up for the weekend and you were planning your dinner, the unthinkable happened in Washington. Federal marshals didn't just knock on the door of the Federal Reserve. They kicked it in. For the first time in American history, the Department of Justice has served subpoenas to the Central Bank of the United States. The most powerful economic institution on earth, the entity that controls the value of the dollars in your savings account, the rate on your mortgage, and the pulse of the global economy, is now effectively a crime scene. President Trump says he knows nothing about it. His advisors say it's about renovation costs. But the markets? They aren't buying the story. Gold just smashed through to an all-time record high this morning. The S&P 500 futures are bleeding out. And the US dollar is shaking. Why? Because this isn't about a building renovation. This is a hostile takeover of the money printer. We are witnessing the end of the independent Federal Reserve. And if you think this is just political theater, look at your 401k. Because we are dangerously close to a scenario that destroyed the economy in the 1970s, and this time, the stakes are trillions of dollars higher. Buckle up. We need to talk about why the DOJ is hunting Jerome Powell, and what this war means for your wallet. Let's cut through the noise. It is January 13, 2026. If you're holding US equities, bonds, or just cash, you need to understand exactly what went down this weekend. Jerome Powell, the chairman of the Federal Reserve, confirmed that the Fed was served subpoenas by the U.S. Attorney's Office for the District of Columbia. The investigation? It's officially being framed as a probe into potential taxpayer abuse regarding the renovation of the Fed's headquarters. But let's be real. In the world of high finance, there are no coincidences. The Trump administration has been in a Cold War with Jerome Powell for years. We know the president wants aggressive rate cuts. He wants cheap money to fuel the housing market and lower the government's massive borrowing costs. But Powell? Powell has held the line. Just last month, the Fed cut rates by a quarter point to a range of 3.5% to 3.75%. For the average consumer, that still feels high compared to the zero-interest days of the early 2020s. Powell has signaled he's done cutting for now. He wants to see more data on inflation. He's being the adult in the room. And that patience has arguably cost him a target on his back. On Sunday, President Trump went on NBC News and denied knowing anything about the DOJ investigation. He played it cool. But his inner circle isn't being so subtle. Kevin Hassett, the director of the National Economic Council and the man rumored to replace Powell, went on CNBC this morning. Listen to what he said. He dismissed the idea that this is political intimidation, but then immediately pivoted to the one thing that actually matters. Do you see the game? They claim it's about building costs, but in the same breath, they mention interest rates. This is what we call a pretext. It's the Al Capone strategy. They couldn't get Capone for the murders, so they got him on tax evasion. They can't fire Powell for setting interest rates, that's illegal under the Federal Reserve Act, so they're going after him for the drywall and the plumbing. So, what is this crime that warrants DOJ intervention? Let's peel back the onion. The Federal Reserve has been renovating its historic Mariner S. Nichols building and the unforeseen costs have ballooned. Budget documents show the price tag jumped from $1.9 billion in 2023 to $2.5 billion today, in 2026. Now, $600 million in overruns is a lot of money to you and me. But for the US federal government? That is a rounding error. That is what the Pentagon loses in the couch cushions on a Tuesday afternoon. The Fed claims the costs are due to toxic contamination, asbestos, lead, and inflation in material costs. Standard construction nightmares. But the administration's attack dogs, specifically Bill Pulte at the Federal Housing Finance Administration, are painting a picture of Roman excess. They're alleging that Powell lied to Congress last June about extravagant features like a VIP dining room and rooftop terrace gardens. Last summer, Powell testified under oath. He said those fancy features were cut from the plans. Now, the DOJ, directed by Attorney General Pam Bondi, is investigating whether Powell committed perjury. Think about the absurdity of this. The chairman of the Federal Reserve, the man managing a balance sheet of over $7 trillion, is facing a criminal probe over a roof terrace. This isn't about a dining room. This is about leverage. By launching a criminal investigation, the administration can argue cause for removal. Under the Federal Reserve Act, the president can only fire a governor for cause. Historically, that meant inefficiency, malfeasance, or neglect of duty. It was never meant to cover policy disagreements. But if you have an active criminal investigation, suddenly, malfeasance becomes a much easier case to make in the court of public opinion. Why should you, the investor, be terrified of a politicized Fed? Because we have seen this movie before, and it ends in a horror show called The Great Inflation. Let's rewind to 1972. President Richard Nixon wanted to win a landslide re-election. The economy was slowing down. So, Nixon sat down with his Fed chair, Arthur Burns, and bullied him. There are actual tape recordings of Nixon pressuring Burns to keep money cheap, to print cash, to make the economy feel good until the election was over. Arthur Burns caved. He kept rates low when he should have raised them. The result? Nixon won the election, sure. But the US economy lost the decade. Inflation exploded to double digits. The cost of living destroyed the middle class. The stock market, in real terms, went nowhere for over 10 years. It took a painful recession in the early 80s to finally fix the mess. Fast forward to 2026. The parallels are chilling. We have a president demanding rate cuts to boost housing and ease borrowing costs. We have a Fed chair trying to resist. And now, we have the legal system being weaponized to break that resistance. If Powell is forced out or intimidated into cutting rates before inflation is truly dead, we aren't looking at a soft landing. We are looking at a reignition of the inflation fires. Imagine mortgage rates dropping artificially to 4%, causing housing prices, which are already unaffordable, to double again because everyone rushes to buy with cheap cash. Imagine the price of bread, gas, and healthcare spiraling because the supply of money has been unanchored from reality. This is why the wallet connection is so strong here. This isn't Washington gossip. This is the value of every dollar you earn being held hostage by political ambition. The market is arguably the smartest entity on the planet. It digests information faster than any news network. And the market's verdict on the subpoenas was immediate and violent. Gold extended its gains to a new all-time record high this morning. Why do people buy gold? They don't buy it to get rich. They buy it because they are scared. Gold is the ultimate hedge against a government that has lost its mind. When investors see the independence of the central bank under attack, they assume the currency will be debased. They assume the government will print its way out of debt. So, they dump dollars and buy metal. Simultaneously, US stock futures on the S&P 500 fell 0.7%. You might be thinking, wait, doesn't the stock market love low interest rates? If Trump forces rates down, shouldn't stocks go up? Short term? Maybe. But Wall Street hates uncertainty and institutional breakdown more than it loves cheap money. If the Fed loses its credibility, foreign investors, countries like Japan, China, Saudi Arabia, stop trusting US Treasury bonds. If they stop buying our debt, yields spike. If yields spike, the stock market crashes. This is the paradox. Trump wants lower rates to help the market. But by attacking the Fed to get those rates, he risks blowing up the bond market, which would destroy the stock market. It's a game of Russian roulette with the global financial system. This war isn't just happening via subpoenas. It's happening in the Supreme Court. President Trump has already taken the extraordinary step of trying to fire Fed Governor Lisa Cook. The Supreme Court is set to hear that case later this month. If the court rules that the president can fire Fed governors at will, the game is over. The Fed becomes just another department of the White House, no different than the Department of Labor or the EPA. But there is a firewall. And his name is Senator Thom Tillis. This is where the story gets interesting for political junkies. Tillis is a Republican. He sits on the Senate Banking Committee. And last night, he drew a line in the sand that might actually save Powell. Tillis pledged to, and I quote, oppose the confirmation of any nominee for the Fed, including the upcoming Fed chair vacancy, until this legal matter is fully resolved. This is massive. Without Tillis, the Republicans struggle to get a nominee out of committee. If Trump fires Powell, or if Powell leaves when his term as chair expires in May, Trump needs the Senate to confirm his replacement, likely Kevin Hassett. If Tillis blocks it, the Fed enters a zombie state. And here is the twist, Powell's term as chair ends in May. But his term as a governor doesn't end until 2028. Powell has said he intends to serve with integrity. That's code for, I'm not leaving. We could see a scenario in May where Trump nominates a new chair, the Senate blocks him, and Powell just stays. Or, Powell is demoted to governor, but remains on the board, haunting the meetings, voting against the new chair's reckless rate cuts. It is a recipe for gridlock. And if there is one thing markets hate more than bad news, it's not knowing who is actually in charge. Let's take a moment to explain the mechanics of what happens to your money if the Fed capitulates. I want you to understand the concept of fiscal dominance. Normally, the government spends money and the Fed manages the value of money. They are supposed to be separate. If the DOJ investigation succeeds in intimidating the Fed, we enter fiscal dominance. This means the Fed's only job becomes keeping the government's credit card bill cheap. The US government is currently $38 trillion in debt. The interest payments on that debt are astronomical. If rates stay at 3.75%, the government has to print more money just to pay the interest. If Trump forces rates down to, say, 2%, the government saves billions. Great, right? Wrong. Because that extra money doesn't disappear. It floods the system. 1. Real estate. If mortgage rates drop to 4% while inflation is still sticky, house prices in places like Austin, Miami, and Nashville won't just rise, they will melt up. You will be competing with BlackRock and Vanguard who can borrow billions for free. Homeownership becomes a futile dream for the average American. 2. Savings, your high-yield savings account that's currently paying you 4%? That drops to 1.5%. Meanwhile, real inflation is running at 6%. You are losing purchasing power every single second you hold cash. 3. The dollar, this is the big one. If the world sees the Fed is rigged, they dump the dollar. This makes imports expensive. Everything you buy from China, Vietnam, or Mexico, electronics, clothes, car parts, costs more. This is the tax you pay for political interest rates. It's an invisible tax that eats your wealth while politicians tell you they are saving the economy. For my viewers in the UK and Canada, do not think you are safe from this American drama. The Federal Reserve is the sun in the solar system of finance. You are just orbiting planets. If the Fed slashes rates because of political pressure, the US dollar weakens. This puts the Bank of England and the Bank of Canada in a brutal position. If they don't cut rates, their currencies get too strong against the dollar, hurting their exporters. If they do cut rates to match the US, they import the same inflation disaster that the US is creating. We are already seeing the contagion. The Canadian housing market, which is even more sensitive to rates than the US, is holding its breath. If the Fed caves, the Bank of Canada will be forced to follow, reigniting the housing bubble in Toronto and Vancouver that they spent 3 years trying to deflate. The American disease of politicized money is highly contagious. So, how does this end? We are forecasting 3 scenarios for the next 6 months. Scenario A, the stalemate. Powell refuses to resign. Senator Tillis blocks the replacement. The DOJ investigation drags on for years without an indictment. The markets remain volatile, choppy, and confused. The Fed keeps rates steady at 3.5% out of spite and caution. This is bad, but stable. Scenario B, the capitulation. The pressure becomes too much. Powell resigns in May to avoid legal fees and reputation damage. Kevin Hassett or another loyalist is confirmed. They slash rates to 2% by the end of 2026. Result, a massive melt-up in stocks, followed by a resurgence of inflation to 8 to 9% in 2027. This is the sugar high followed by the diabetic coma. Scenario C, the constitutional crisis. Trump attempts to fire Powell for cause citing the renovation scandal. Powell sues. The Supreme Court steps in. The bond market revolts, yields on the 10-year Treasury spike to 6% because investors demand a risk premium for American chaos. The stock market crashes 20% in a month. Result, a self-inflicted recession. Integrity and a commitment to serving the American people. That was Jerome Powell's statement regarding his future. Whether you like the man or hate him, whether you think he printed too much money in 2020 or kept rates too high in 2025, right now, he is the only thing standing between the dollar and total political capture. The DOJ subpoenas are a crossing of the Rubicon. We have moved from pressure to prosecution. As investors, we cannot control what happens in the White House or the Supreme Court. We can only control our exposure to the fallout. If you are sitting 100% in cash, you are betting that the government will be responsible. History suggests that is a losing bet. If you are 100% in stocks, you are betting that the transition will be smooth. The volatility index suggests otherwise. This is the time to look at hard assets. Gold, commodities, real estate, and yes, perhaps even Bitcoin as a hedge against the fiat system's instability. The walls of the Federal Reserve are being renovated, but the foundation is cracking. And when the foundation of the world's reserve currency cracks, the tremors are felt in every bank account on the planet. Watch the news on January 27th. That's the next Fed meeting. It might be the most awkward and important meeting in the history of central banking. I'll be watching it with you. If you found this breakdown valuable, smash the like button. It helps us beat the algorithm, which is the only thing harder to beat than the federal subscribe, and hit the bell so you don't miss our update when the Supreme Court rules on the Lisa Cook case. Let me know in the comments, do you think Powell should resign, or should he fight the president to the bitter end? I'm Boss, and this is Boss Economy. Stay liquid, stay skeptical.